Hey everybody, welcome to Young Bucks. Really big show for you this week. We're talking about Trump's new tax plan and what it might mean for people out there. We're also going to talk about Disney's interest in buying some Fox properties. And Ben and I talk about Snapchat, their earnings disappointment, and the future of the company. Thanks for being here. Hey everybody, welcome back to What the Buck, the segment when we talk about bucks. That's money. Andrew Hall here, joining me, Sam Frost, Matt Krebsbach,
yo,
and Benjamin Nye. It's grind week here at the office, working out all day, every day. So taking a break from our fitness, as you can tell, to talk about money, all that good stuff. A couple topics. First things first, big deals in the chip space, at least. Chip deals, wow, that was bad. Just leave it. Chip deals being floated out there. Broadcom, Qualcomm, Ben. Sam and I were out of town when this news broke. You were all over it, you and Krebs. What were your initial thoughts when there were reports that Qualcomm might get bought out?
Yeah, for those of you who missed the live broadcast, Krebs and I covered this as it was breaking on Tusk Media's Twitter account through Periscope. But basically what happened was Broadcom came out, this guy by the name of Hock Tan. He has been consolidating a lot of the semiconductor industry, which are the chips that go in your phones, and they make your phones run. Phones just don't run because they have finely crafted aluminum. They run because of chips. And Qualcomm and Broadcom make these chips. So Broadcom wants to consolidate this space in order that they have more power over Apple, because right now Apple can just name their price. So what Broadcom wants to do and what Hock Tan wants to do is he wants to consolidate it by Qualcomm, and so now they can actually charge more for Apple, and they can have a little bit more powerful position at the table. Question or not is whether or not this deal actually goes through. The bid was actually relatively low. My guess is that Qualcomm will reject this bid, but Krebs might have some other ideas.
Yeah, I do expect them to come out and say it's just too low it doesn't create enough value for the shareholders, like whatever boilerplate stuff companies say when they reject a bid. But then I also think Broadcom's probably going to raise that bid, probably another $5, and then you're going to see another cycle of this, which I feel like is oftentimes the case. It's not that surprising that Qualcomm had an offer just because they're going through so many litigation issues with Apple. And I mean, when you're going against Apple, that's not usually a good sign with how big they are. It's rough.
Yeah, it's kind of an interesting.
So I mean, basically they did a lowball bid on them when they're when the entire chip space is just, it doesn't matter what chips you're doing, just like the entire chip space is blowing up in 2017, and Qualcomm's just been like pretty flat because of those litigation issues.
Yeah, it makes sense from Broadcom's perspective, certainly, to go after a company that maybe seems like they got something of an overhang, a black eye still. Wouldn't be surprised to see this kind of continue to trickle up, come back with another offer. But nonetheless, I mean, it was high enough that Qualcomm stock really rallied. It took off Friday afternoon, went up a little bit more on Monday as the details of the deal were actually revealed. Sam, you got any thoughts? Because there's also kind of the overhang of whether regulators will let this consolidation happen.
Yeah, I don't know as much about the regulators, but it's just kind of, you got to keep in mind that Qualcomm is beat up right now, and so, yeah, it's a $70 price target. But it's kind of like what Krebs was saying. I don't know that that's really that much gravy. It sounds like that's like a really sweet offer initially when they're trading like $55 a share. But you got to keep in mind, I don't know, it's about 3 years ago they were trading like $80 a share, which isn't too long ago. So I don't know if Qualcomm would accept it. You could see Broadcom offer a higher price, but I don't know that you're going to see them jump up to 80 or anything like that.
It's one thing when you, in terms of thinking will it go through or not, it's one thing to look at like the size of the companies, and they're both, assuming the buyout price goes through, it's going to be like a $100 billion valuation of Qualcomm. Broadcom's already at over $100 billion. But then the more important thing is the overlap in like the products. And Broadcom and Qualcomm actually do have product overlap, whereas Qualcomm and NXPI, Qualcomm's trying to buy NXPI right now in the background of this, but they actually don't have any overlap, and they're having significant troubles getting that through regulatory issues. Like I have a really hard time seeing that going through with the overlap that they have or will have.
And then you had Broadcom basically bringing their business, their headquarters, all that back to the U.S., which the timing of that's suspicious, because that was not suspicious, but interesting, because that was just revealed, and you almost wonder, how much of that is a play to get in the political good graces of the Department of Justice and the administration as a whole to get maybe look ahead and get a read through. Hey, we're bringing our business back here. We're bringing tax dollars back to the U.S. Do us a solid. Let this thing go through.
Well, my man Hawk, he actually had a joint press conference with President Trump. So, Trump has now essentially endorsed Hawk Tan and Broadcom, and now it would be difficult to say, hey, wait, we're friends, but he's a great guy. Actually, he's not a great guy.
Trump would never come back on something like that. But it's an interesting case, too, just on the practical side. If you are a Narwhal client, many clients hold Qualcomm, and it's kind of a case of, we talk about how everybody kind of has their own perspective on things, and every client has different asset allocation, different risk tolerances, different expectations for their portfolio. Qualcomm, I think, is an instance of one piece of news being digested slightly differently by different PMs and being applied differently based on client risk profiles, things like that. For some clients, we took a lot off the table. For some, we just continue to hold Qualcomm. For some, maybe we trimmed a little bit. So kind of a little bit across the spectrum. So if you happen to own Qualcomm and you're a Narwhal client, you have questions, make sure to hit us up, and we can give you some guidance there. Another deal, kind of the media space, it seems like there's a different Disney headline just about every day, whether it's ESPN or the overhang there, earnings coming up. But 21st Century Fox is in talks to sell really the bulk of their assets to Disney and concentrate to where Fox would basically be a company that does news and sports. Interesting to me because I think of them as really a second-rate sports player in particular. Kind of an odd thing, but anybody have any thoughts on just kind of what this might look like?
I wonder if Fox sees an opportunity to, with the ESPN struggles right now, if they see this as an opportunity to almost like give stuff to Disney and have them venture away from ESPN as ESPN's having its issues, that Fox sees like an opportunity to steal that market share from ESPN.
I just think that may be what they're looking at. That'd be an incredibly bold bet to basically say, hey, if we concentrate on sports, something we have not done well historically, really over a prolonged period, we can come back. Because, they've just, when you read the headlines, Fox Sports had to lay off basically everyone that did anything in writing. They laid off just about everybody. They had the famous quote of, quote unquote, pivoting to video. They pivoted to video, and the data was very poor in the first quarter in terms of impressions, things like that. So not a big move. So it seems like they've really mismanaged these things. You had the huge launch of Fox Sports 1, maybe that was 3 or 4 years ago, and it was a big deal because they, quote unquote, stole talent from ESPN, and then people went over there, and it was a disaster. You had Regis Philbin hosting shows that were terrible, and now you're actually starting to see some of that talent, like Katie Nolan, a young person who had her own show on Fox Sports 1, is now left, and actually one of the few interesting talent gets by ESPN recently. So it seems like if that's their strategy, I'd be very, very speculative at best.
Yeah, but the flip side, though, is you can still also argue ESPN's time out dropping the NFL, their NFL rights or whatever. And we were joking about it yesterday. It's like bold move for ESPN to venture away from sports, like what they're known for doing. And it's interesting that, Fox, who hasn't been great at it, is venturing towards it. ESPN, who historically, they've had struggles lately, but historically has been good at sports, it seems like they're venturing away from it almost.
My guess on the deal is that it's actually distinct from sports. I don't really think Disney shouldn't have much confidence in its ability to manage a sports franchise at the moment. Whether or not it does, I guess, is another matter, but they shouldn't have confidence. What I think Disney is looking forward to is 2019 when they come out with the Disney on-demand stuff. If they can get Fox content on there as well, all of a sudden Netflix looks a lot weaker because Disney has already said they're pulling stuff from Netflix in 2019 to come out with their own platform. If they can get Fox content on there as well, that all of a sudden that's a legitimate competitor to Netflix. It seems like Fox said no to this anyway, so it could just be fake news. It could be Disney just being desperate. It could honestly be an indictment on Disney and its current strategy.
And see, I actually read some of the stories almost more as Fox was floating it out, but to your point of an indictment, it almost seemed like, hey, do you want to overpay for some weaker assets? Something, with Fox, for better or worse, Fox News is a staple for that business. They weren't shopping that. They had no interest in doing that. It's kind of some of the Fox properties, the non-news, non-sports things. And even in sports, I think they actually have some pretty attractive live sports rights and things like soccer and, things like that. Greg would probably know more about that than me. But
I just think it's curious that Fox would even be interested in selling off part of the business. Like Rupert Murdoch has been pretty much empire building And the fact that he wants to, he just did it with Sky in the UK, which has a lot of sports rights, especially with soccer. I mean, they just consolidate that entire thing and are trying to buy out the entire thing to build an empire. And then it's interesting trying to sell off a big part of the business now.
Yeah, and I think you get kind of this mentality. And I was talking with someone recently whose family's pretty connected with a large company, and they're third or fourth generation. And the comment he made was, we don't really have an interest in being involved because we don't want to screw it up. And you almost wonder, as the Murdoch family passes it to the next generation, which is increasingly the case, how much of this is kind of not necessarily, maybe not a lack of confidence in a further generation's ability to manage, but just a lack of interest. I mean,
millennials, dude.
Yeah, man. Yeah, you never know. I mean, whatever your dad built may or may not be of interest to you. I mean, yeah, sure, you like the money off of it if you're the Murdoch family. I mean, you take that all day long, but it might be an opportunity to kind of get out of the play.
I think the Murdoch kids have proven that they are incompetent.
Yeah.
I think over time.
Yeah. Trump tax plan, lots of kind of read-throughs here, tons to unpack. We could probably do a whole, maybe we'll do an audio-only edition of this show and just kind of dive through select points at some point as it gets closer and we learn more. But just general observations. I'll start with you, Ben. I mean, do you think this thing's actually going to get passed? I mean, at the end of the day, it's hard to point to a big piece of legislation or a big plan that's really been passed through traditional means under Trump, but is this going to be one of them?
I think it's going to get passed, but it's going to be extraordinarily watered down. I think we probably won't even notice that it got passed, but the Republicans need to have something to say they did in the first year of a Republican Congress, Republican presidency, and so I think this will be what happens, but it's not going to happen the way it's currently written.
And they're going to say it's a great accomplishment, all that stuff when it does happen.
Yeah.
I completely
Mission
agree.
accomplished banner and everything. Yeah. Sam, you got any thoughts?
No, I agree. If it goes through, it's not going to look anything like a tax reform or tax cut.
I mean, already what we've seen is they've come out with different scenarios of people and their potential tax cuts, and it really amounts to an immaterial amount.
I'm basically just flipping like the standard deduction and what you can claim, and
Right.
like the end outcome isn't that different.
Right. Yeah. It's just kind of a bunch of moving pieces. The nice thing about a term like tax reform is that literally any change is going to be qualified as a reform. And to be fair, like, we're not just being critical of Republicans. That's how every tax reform tends to be.
I would say everyone talks about we need tax reform, not a tax cut. And that kind of domes me up, because if you talk about tax reform, then it's almost just shifting where the money's coming from, And so I almost feel like the only way for like true tax reform is if there are some like social spending things that are completely irrelevant that you eliminate, and then say, okay, well, we now need X less dollars so we can cut taxes across the board for that. I mean, is that fair, or can you actually have tax reform without just picking and choosing where the money is now going to come from?
That's all it is. Yeah, and that's the thing. Like, if somebody were to say tax reform, I'd be like in the real meaning of what like reformation would be, it would be like a tangible change in how tax is even collected, where it's coming from. Like something like going, hey, we're going to now institute a flat tax on consumption. That would be reform, like in a literal sense. Not necessarily, oh, this rate's going to tweak, but that one's going to tweak by an equal amount and offset.
Right.
It's just kind of this, let's slush around. Do we want 5 pennies or do we want a nickel? That's kind of what it seems like. The important part of the show, college football picks. Ben and Garrett sitting at 27-17 on the year. I'm at 26-18. Sam and Krebs at 24-20. Everybody's still comfortably over 500. The games we got this week: Washington -7 at Stanford, Georgia -3 at Auburn, Wisconsin -13 versus Iowa, Alabama -14.5 against Mississippi State, Notre Dame -3.5 at Miami. That's the bonus game for the week. Who picked that, Sam? All right, there you go, Pistol. Let's start with Washington -7 at Stanford. Washington coming off a big win over Oregon. Talk to us, Ben.
Yeah, I mean, we're going away from Husky Stadium for the first time in a few weeks, so that's going to be a little tough. Having said that, Bryce Love was not 100% last week. I think he rushed for about 50 yards or something. I think Washington's defense is unequivocally the number one in the country. So
Nailed it. Unequivocally.
No, it's true. We're number one in yards per game, number one in points per
We're
game.
playing like D3 teams. It's not that hard.
Okay, our strength of schedule is 51. You know what Alabama's is? 43.
So Bama's played a tougher schedule.
By eight people. By the way, Wisconsin, which is this guy's team, they're number 58. So,
for now,
this stuff.
But Washington's defense is number 1 in the country. They're gonna keep Stanford scoring very low. It's gonna come down to the offense, and our receiving core has really been hit. So I think they're gonna cover, but it's not gonna be by much. I'm going Washington.
Man,
yeah, I mean,
this is just super awkward because Bama has the number 1 scoring defense.
That's not true.
I'm looking at it.
Then the podcast I listened to is wrong.
Yeah, I mean, two really weak teams here. I just think Washington will cover. I don't think Stanford's good. I think Washington's okay. So
I got Washington -7.
Washington.
All right. Georgia Bulldogs, number 1 team in the country, which is actually true, at least in one poll. By the time this is released, that could change. But I do think it should be noted that we were the first media source to report that Georgia was the number 1 team in the country. We did that last Tuesday at about 4 o'clock, and it was announced 3 hours later. So patting ourselves on the back, Georgia number 1 team in the playoff poll. 3-point favorite at Auburn. It's a weird game. I don't like it. I don't feel real comfortable with it. I'm actually taking Auburn in this game.
Whoa.
Traitor.
Partially an emotional hedge, but also this is the most uncomfortable I've felt about a Georgia game all year. I think Auburn's getting better as the season goes on. It's a weird rivalry. Deep South's oldest rivalry. People forget that. But, yeah, I think it's making me real nervous.
So I agree. This could be a tough week for Georgia because after the college football rankings come out, Georgia's probably going to drop a spot. Alabama's going to jump up to number 1.
Doubt that.
After beating LSU. But that said, Auburn, they're it's just not a good program.
The thing that's scary about Auburn was like they're one of those rare teams that's in the top 25 in both points allowed and points scored, and it seems like they're like going up in both of those rankings, and that makes me nervous. They're one of those. They're just peaking at the right time.
Mm-hmm.
Hopefully that doesn't mean they're better than Georgia, but
So you can't discount Auburn luck. And so
yeah,
if Auburn
That's
wins,
a big thing, too.
If Auburn wins, it's going to be because they were losing by 28 with like 8 minutes left in the game, and somehow they scored 5 touchdowns.
Yep.
Like that's just so. If Georgia's not winning by 28 at the end of the game, it's still up for grabs.
Yeah.
But no, I got Georgia. I think Georgia will take care of them pretty handedly.
yeah, I'm picking Auburn strictly because they're playing at home. I think that's gonna be a pretty big factor. That's gonna be a pretty crazy environment, I would assume.
I think Georgia's going to win. I think Auburn is just a very overrated team. But going back to Washington really quick, total defense yards 2168 for Washington, 2194 for Alabama. Yards per play 3.71. I mean, it goes on. So
but not in scoring defense, which was the first.
No. Scoring defense is true, not scoring defense. Scoring defense is false because we've had a fumble recovered for a touchdown and an interception return
That's not
for a
what
touchdown.
matters. It's how many points you give up.
Yeah.
But that's not our defense.
All right, switching away from Washington. We don't want to talk about it a third time. Wisconsin, a 13-point favorite, playing a ranked team. So big time for Wisconsin, starting off their season now, kind of hitting into that midseason stride at Game 10 against Iowa. Krebs, what you got?
Iowa's such a lame team. I really do not like watching them play. It's just
They're peak
it's
Big
just
Ten.
it's just run pass every 3 downs. I mean, they don't score a lot of points. They play decent defense, I guess. I'm taking Iowa here strictly because I think it's gonna be like a 20-10 type game. It's gonna be low scoring, but then counter that is they just put 55 on Ohio State. So I still think it'll be a low scoring game.
And what you got?
I have Iowa.
I'm going whiskey.
I got Iowa.
All right. Oh, Alpha Hall here. Bama, 14.5-point favorite against a Mississippi State team. We'll see if Bama's, anywhere close to as good as Georgia. Georgia won by 28, but
Yeah, so Mississippi State, they almost – I don't even know what the final score was against UMass last week, but
that was trash.
they were losing at one point.
It's crazy that this is only 14.5.
Every single year, Mississippi State gets pumped up for Alabama. Like, they're like the number one, like, we want Bama guys. And every year they get pumped up saying this is our year, and Alabama beats them by like 28 every single time. I don't see this year being any different. I'm also shocked that it's only a 14.5 point spread. So I'm taking Bama.
I got Bama.
I have Alabama as well.
Alabama.
All right. Bonus games, Notre Dame -3.5 against Miami. Kind of a playoff eliminator for these teams, in my opinion. So, Sam, what you got?
Yeah, y'all could probably add more on this. I picked it because I thought this was a tough game to pick. I think Notre Dame has everything to lose here, I think Miami, they've shown that they've kind of turned the program around. They're getting better and better. I still don't think this is the year that you see them in the playoffs. Kind of going with Notre Dame just because they've had good seasons in the past and they know how to play in big games. And I think that's going to continue out throughout this game, and I'd see Notre Dame winning.
I got Notre Dame. I would take Notre Dame if this was Notre Dame -10.5. I think Notre Dame's just a much better team. And my confidence in Mark Richt as a longtime Georgia fan in a big, meaningful game at home in November is like 1%.
You also have Notre Dame because if Notre Dame wins, that means Georgia's good.
No, it would help. It legitimately would help Georgia at this juncture if Miami would win.
No.
It's better because Notre Dame has. If Georgia loses a game, Notre Dame will probably, and Notre Dame doesn't. Notre Dame will go and Georgia won't. So Georgia needs Notre Dame to lose.
I'm just saying that Notre Dame's the only good team that Georgia's beat, so they're the only credible win right now.
I mean, we've beat 4 ranked teams. It's pretty solid.
Yeah, but
Mississippi State's one of them, though.
Yeah,
Mississippi State's only a 14-point underdog.
And
to Alabama.
that's a fluke. That's literally because
numbers are numbers.
That's just because every other team below them is pathetic.
I just don't think Miami's good. I don't think the ACC is good this year. I think Clemson's overrated. I don't think Virginia Tech's good, who they just beat last week.
Yeah.
So that's why I'm taking Notre Dame. And they've actually beaten every decent team they've played.
Except Georgia.
Maybe they're not decent. That's an implication.
Well, I mean, they've beaten Michigan State, NC State. Like they're not great teams, but they're solid teams. They're not easy games.
I'm taking a flyer. I'm going Miami, and this is more just because I really want Miami to win. Kind of like what you were saying, because if Notre Dame loses 2 games, they fall out of the top 10. Miami, I think they're not going to win the ACC. I'm okay with them going undefeated even into the ACC championship game because Clemson is going to go in no matter what.
Yeah, I will be actively rooting for Miami, but I don't think it's going to happen. All right, that's all we got. Y'all have a great day. Thanks for being here. Stick around. More good stuff coming maybe. Hey, everybody. Welcome to Getting Tanked, the segment that everybody loves where we stand in front of a fish tank and talk about things. Andrew Hall here, Ben Nye with me as well, and we are talking today about a stock that we've talked about before, I think, on this show. I know we've talked about it on our other show, the Investing Podcast. We talk about it a lot in the office. It's also a product that we use pretty frequently around the office, mostly to make fun of each other and use weird filters. But we're talking about Snapchat. Snapchat's a company that, Ben, I think you and I are maybe the only people in the office that kind of liked from an investment perspective. And for once, we're in agreement and we're both wrong. Tough run for Snapchat since that IPO.
Yeah, so IPO means before that happened, Snapchat, you could not trade shares of Snapchat on the public markets. When they come public, they raise a little cash for themselves. They can use it to invest, and now you can trade it. So we are long shares of Snapchat.
Barely,
thankfully.
Yeah.
And it's becoming less every day.
Yep.
That's what happens when a stock goes down that you own. It becomes less value. So that's one good piece of owning a stock that goes down.
It's going away right before our very own eyes.
But so Snapchat brands itself as a camera company. They obviously have the app, but the question now is, can they make it to the next level? Whether that is getting more users to join the platform or whether it's monetizing the platform more, which means that they're selling more ads or selling higher value ads or selling more relevant ads. So that's the big question on the table, and this quarter was a quarter in which they exhibited no to all those questions.
Resounding no's.
What were your thoughts on that?
Yeah, I mean, I think in general with Snapchat, there's a couple things I think worth pointing out, to give you guys some backstory, because I don't expect you to go back and listen to all our previous commentary. But Ben and I liked Snapchat for a couple reasons. First things first, we're traditional value investors, and this was not a value investment. We were not saying, hey, here's this really cheap, undercovered, underdiscussed opportunity that we can take advantage of. This was something that we bought in small amounts to kind of flavor into portfolios, especially for a number of younger clients who actually talked about it and said, hey, are we going to be able to get Snapchat? Because they knew the initial public offering was coming up, and it was just a highly talked about thing because it's mostly millennial folks using the app. So we liked it really because of the comparison. I thought a favorable comparison to where, say, a Twitter was in terms of a business profile when it went public. I thought Snapchat was a little bit further ahead than that. And I thought that Snapchat could carve out a niche and basically shake off the comparisons to Facebook. I mean, I never thought it was going to be Facebook. That was not my expectation. But I thought they could carve out a niche in which they're saying, hey, we're not Facebook. We're Snapchat. This is our own thing. We have a highly engaged user base of young people using this on the mobile platform only, which is the hot space to be in. Those were the types of things that were attractive to us from an investment perspective. But again, this is really, they've yet to perform well as a publicly traded company relative to the expectation. And it's the kind of thing that's frustrating is at the end of the day, Twitter was completely incapable of shifting the narrative away from monthly active users. Snapchat can't escape this stalling DAU growth, especially in the United States. It's not growing. They can't figure out how to get it to grow. It's almost like everyone that's going to use Snapchat is using Snapchat. And they're getting hit from what they call ARPU, which is average revenue per user. They're getting hit there as well. So it's kind of one of those things, if you want to think about our office and you want to say, okay, well, there's really two ways. We're investment advisors. How do we make more money? There's a couple ways we could do that. Number one is we could go get more clients, which is what they're trying to do, get more daily active users. The other is, well, we could bill our clients more money. Now, it's a weird scenario, and we're not going to do that. We're not going to go to a client and raise their fee from 0.5% to 1% or to 2%. But those would really be the two ways we can make more money. We either get more people in here or we sell more stuff to them. And they're basically saying, yeah, we can't really do either of those things. We got a lot of cool terms. We feel good about it. We're excited about international growth. But, yeah, it's really frustrating to see that continue to happen.
Right. And, to your point about international growth and U.S. growth, I think that international growth, if it were not to grow much at all, I would not be too concerned about that. They don't make that much money there. They need to reach a critical mass, and they want to understandably go after the profitability right now, which is in the United States. Problem with that is they grew DAUs, daily active users, by 2 million to 77 million last quarter from 75 million. That's not what you want to see from a growth company. When you need to scale, which means get more leverage on your costs so that you're bringing in more revenue but your costs stay roughly the same, then you need to really ramp up those daily active users more than Snapchat has done so far.
Yeah, and it's one of the things that it seems like I will give them credit that I think they're trying things. You have Snapchat original programming, some of which is trash, some of which is pretty good, but it's this type of program where you have just staggering views. I think there's a show, The Rundown or something like that we were talking about that's on there, and apparently tons of people watch it. Barstool Sports has a show on there. They've got exclusive partnerships with NBC. They're doing all these things that in theory should be really great. Those things just aren't attracting anybody to the platform. They're keeping engaged users pretty engaged, but it's just kind of watering down because, again, they're spending money on these things and they're spending time and effort and resources, and at the end of the day, they're just not growing users.
What's very interesting to me is the dichotomy between how Wall Street sees the stock and how a lot of these strategic players see the stock. So NBC is obviously a big investor in Snapchat. Tencent just bought a huge stake in it. And these aren't indications that Snapchat will be bought out, but they're indications that someone sees value in this property. This was not happening with Twitter. And so there is a distinction there. At the same time, if you're looking to hold Snapchat from quarter to quarter, it's a really it has been a rough go of it, and I think it will continue to be a rough go of it.
Yeah, and for now, I think in our portfolios, I mean, you always hate to say this, and certainly I'm sure we're going to get a call or two from clients saying, wait, what's the deal here? But it's a longer-term play. It's a tiny portion of the portfolios that we manage. Very small positions for our clients and getting smaller, which we joke about, but we don't really like saying that. It's kind of in one of those no man's no man's territory, because like you don't really want to sell it here and just move on because, you know, we didn't buy this for a 6-month outcome. But at the same time, yeah, it's starting to become a challenge in terms of understanding how they turn this around. For now, I'm kind of a timid hold, not highly convicted in that hold, but I think I'm going to hold on to it in my accounts.
Yeah, if the stock ran up significantly, like it did this morning pre-market, I would look to opportunistically get out, but I'm not going to rush to the exits because I think that this is a narrative that's been playing out for a while. It'll continue to play out, but I think that at some point there is value to the platform, and I think that will be realized in some capacity.
Yeah, and just kind of goes to show you that sometimes, you know, revenue growth, top line growth, great ideas, business plans, all that kind of stuff, that doesn't always drive and fit expectations as to what's out there. So kind of a cautionary tale of, hey, sometimes you have to readjust expectations. Is Snapchat a fundamentally different company than it was 6 months ago? No. But the read on it, and the read's not necessarily incorrect, the read on it's very different. And so that changes our outlook. That's why you always have to kind of remain diligent, trust your process, stay disciplined in price targets, things like that, and execute on them. Thanks for being here.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.